Stocks extended their tech-led advance last week as signs of a resilient and still enthusiastic consumer boosted momentum.
Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update.
Stocks traded in a narrow band early in the week, but ended the 5 trading sessions with a powerful advance. While the Dow dipped a little bit lower, artificial intelligence, or AI, names powered the gains in the S&P 500 and the NASDAQ composite. The NASDAQ bobbed around the 16,000 level for most of the week before posting consecutive record highs on Thursday and Friday, surpassing its 2021 record. It was the last of the 3 major stock benchmarks to reach a record high this year. Economic news also helped boost markets. The Personal Consumption Expenditures Index, or PCE, which is the Fed's preferred inflation gauge, rose 0.3% in January versus December and 2.4% on a 12-month basis. Both were in line with expectations. Stocks ticked up on Thursday following the release of this report. With all the excitement over AI, it's easy to overlook some key economic indicators that also speak to the underlying strength of the economy, specifically consumer data. In addition to the closely watched PCE report, an end-of-week consumer survey revealed that while sentiment softened in February, it remained near a 32-month high. Fresh data this week also showed an unexpected jump in personal income. Finally, the PCE report also reflected an ongoing consumer shift from goods to services, a sign the economy continues to normalize after the pandemic. Since 2/3 of gross domestic product comes from consumer spending, these consumer-related metrics help support the narrative that the economy appears to be gathering momentum. As always, we will continue to keep our finger on the pulse of what's really going on in both the stock market and the economy. This week's key economic news that we're watching includes today, a report on motor vehicle sales. Tomorrow, a report on factory orders and the ISM Services Index. Then on Wednesday, we have the ADP employment report, JOLTS, and a look at the Beige Book. And then on Thursday, busy day, we have Federal Reserve Chair Jerome Powell's speech, a report on jobless claims, and then the International Trade in Goods and Services Productivity and Cost Report. And then wrapping up the week on Friday, we get a look at the employment situation. With SmartMix, of course, we invest primarily in individual stocks, cutting out the many hidden costs that can be found in today's investment products. As earnings season continues, we have a number of companies that we are keeping an eye on, as you can see on the screen. If we are not investing your life savings for you, you can learn about our low-cost, fully transparent, and personalized approach at smartmixportfolios.com. Lastly, later on today, I will be sending out our full economic update for the week. This update includes more than what I talked about here this morning, including our very popular weekly tax tip. So if you're not getting this email and you would like it, you may subscribe at our website. Again, www.investwithccg.com.
Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.